Hello and welcome to another technical analysis tutorial. In this tutorial we want to talk about the strategy where you add two moving averages, in this case the 20-day moving average, to a chart. This is a daily chart, and I have a channel created with these two moving averages. So the way to do that is first of all to add them to your chart by going to indicators and strategies on TradingView and typing in moving average. I use the simple moving average, which is just the moving average. There's also an exponential one, but I tend to use the moving average, which is fine. There is no right or wrong. It is just personal preference. And then for one of them, I click on here, I select the source low, and for the other one, I select high as the source, which then creates a channel. So to enter trades then, I generally try to identify a pattern. So on this chart here, which is the cryptocurrency Cardano, and this is a daily chart, it works on different time frames, but for the example here, I use the daily. So we can identify a pattern here, which is, in my view, a double bottom. So you have one low here, another low here, and we also can identify a neckline, which is this one. Just need to move that a little bit higher. So that is the neckline, and it is the neckline because we have one point here, we've got one point here. You can see how we've been trading along that resistance line for a while. Then we try to push the price away from that resistance line once more, and there was actually an attempted breakout here, but that failed. And then when we did the we couldn't really push the price away from it anymore, and there is more detail on the lower term time frames of course, but then there was a breakout here, and at that point, with that retest, I would have entered the trade, and it went all the way up here. You would have stayed all the way in the trend. Now, of course, there was a possible trade exit here when you saw that first red candle. But if you went strictly, or if you had gone strictly by this strategy that I'm going to show you, you wouldn't have exited the trade until here, which was, you would have entered basically at pretty much 140 perhaps, yeah, around 140, and you would have exited as soon as that candle broke through that lower moving average, moving average, the lower end of the channel, which was at 154. Only very nice or very low profit in this case, but there was a profit. And however, in this case here, in this particular example, it would have been, sort of not easy, but you would have exited higher here because you saw that first red candle emerging. You probably saw a bearish divergence on the chart, so you would have exited earlier. But in this video, I just want to show you that one strategy and how you can apply it. Let me show you another example. So for example, here we have another double bottom, 1, 2, or actually close enough to a triple bottom, because you had a third and actually a fourth one already hitting that line. But I think it's more like a double bottom because you have these two lows here. Then again, you can identify a neckline, which is rather pretty clear here in this case. So again, possible trade entry would have been here, just because before that or after that breakout happened, there was no retest. Maybe there was one on the lower time frame, but from here you would have entered the trade, and you can see that all the way until up here you didn't actually cross the lower moving average at any time. So you would have stayed in the trade all the time until then there was a break of this moving average here, and that is when you would have exited the trade. So these are two examples on this chart. You can also go into the lower time frame. So I just want to give you another example on a lower term time frame. This is now Bitcoin US dollar chart on the 4-hour time frame. I don't have the 20-day moving average on this chart now. I have the 20-period moving average based on the 4-hour chart, and we try to identify patterns again. One pattern that straight away jumps into my face is this one here. You have a channel, and we broke that channel here. So that is when a possible trade entry could have happened. You would have entered the trade here with a stop loss somewhere down here, just in case it was a forced breakout. But you would have entered the trade here at 46,150 roughly, and then you would have stayed in the trade all the way until here at 47,500. That lower end of the channel would have been broken. So basically you made all of this gain here. 1 second. You made a profit from here to there. So not massive, but you can do that all over again, you know, time and time again. And whenever you identify a pattern after the breakout, you can jump in. And as soon as then the channel is broken, for example, in this case to the downside, that is then when you can exit the trade. So nice profit and a very good reward to risk ratio. And let's see if we can identify one more. And again, here you have a double bottom that you can identify with a neckline here at that point. And you would have again entered the trade here, maybe even after that successful retest and went up here. Yes, you would have still stayed in the trend, in the trade. From there to here, you would have still stayed in the trade, but here the channel was broken, so that is when you would have exited it. So trade entry at 49,200, exit at 50,500. Again, nice profit, and again, maybe not a massive profit, but again, you can use that for short-term trades. So I found this just to be a very nice trading system that is very beginner friendly as well. And you know, your profits might not be necessarily massive, but you can use it on different time frames. I just showed you on the daily, you could have made some really nice gains there on the daily. And here on the 4 hour is of course a shorter term time frame. It all depends on, do you want to trade, you know, during the day? Do you want to trade during the week? You know, how many times a day, how many times a week, and which time frame just works with your personal preference. And I found it a very, very good trading system. And yeah, I like to use it from time to time. So a really good method to very systematically enter and exit trades. So hopefully that video was useful. If you liked it, please smash the like button. And if you want to follow me on this trading journey, then please subscribe. Thanks a lot for watching and see you in the next video. Bye bye.